Will silver be the king of the precious metals this year? I don't know. It's quite a possibility it could at least outperform gold. I'll explain why and how in this video as we explore. For the last couple of months, and even up to a year ago, I've been consistently telling my viewers to not compare gold with silver, and vice versa. So it doesn't make sense that I'm making a video about gold versus silver. What kind of battle is there? Well, I think it's important to kind of take a look at the dynamics of both these metals and see what's moving the price from one compared to another. In a sense, making this comparison and maybe making a call as to what the winner is going to be will help you understand why you should not compare the metals. For your own personal portfolio, that is. I'm going to be referencing a piece here from Eric Norland from CME Group, where he discusses some of the different factors and the drivers that affect the gold to silver ratio. We've seen gold prices reach a new record high, which is adjusted for inflation of $3,500 an ounce for the first time before easing back to where it is right now. The silver prices have also been rising, and they've peaked to the 13-year high above $37 an ounce, but remained well below its all-time high in 1980 and 2011, especially when adjusted for inflation. But over time, the relative value of gold and silver as measured by the price ratio has varied amid supply growth, central bank buying, and that's a key here, and advances in technology, as well as the pace of Chinese growth. Those are the main areas that are driving silver's move. Now, before we get too much further into this, I want to remind you about channel sponsor Summit Metals. I've gotten a lot of good feedback from viewers about Summit Metals, great customer service, and their fast shipping. They also have competitive prices now, so check them out at summitmetals.com. Now, gold's rally has outstripped silver, but silver has really begun to make a catch-up here recently, and that's good because the high gold to silver ratio has been very frustrating for silver stackers. On a day-to-day basis, gold and silver prices are often highly correlated with a 1-year rolling correlation coefficient ranging from like 0.68 to 0.95. Now the two metals are experiencing their weakest price correlation in over 2 decades, hence why the gold to silver ratio is so high. Even during periods of high correlation, the gold to silver ratio can move a great deal. So during gold's period of outperformance over silver, the gold to silver price ratio, which again, as a reminder, is a measure of troy ounces of silver that it takes to buy 1 troy ounce of gold. And right now, it is, back right around 90, 91 at the time that I'm recording this video. So 91 of these to get to one of those. Yes, indeed. I tell you what, that's pretty high gold to silver ratio. We did see it cross over for the first time to over 100 back in 2020. In fact, it got up to 126. That was the peak before falling back towards 90. And we saw that later in the year. During that period from 1997 to 2011, 1 ounce of gold typically bought anywhere from 25 to 83 ounces of silver. So its current trading levels around 91 or so, as expensive as silver is, still far from what it once from its historic norms. In fact, right now, there's no real consensus on what that norm is supposed to be. Right now, I'm thinking that normal will probably be around 80, 75 to 80. But gold has an advantage that silver lacks, and that is central banks. You've heard me talk about that time and time again. Central banks have been net buyers of gold since 2008. After having been net sellers previously. It's one of the reasons why the price has been so low for so long for gold. Central bank buying removes gold from the market permanently, or at least until the central banks choose to reduce their holdings, which they haven't done since 2007. Net of official central bank transactions, gold supply is lower today than it was in 2005, while silver supply is up over 35%. So that really breaks it down. Now, obviously, net, we're talking about the overall measure of central bank holding. There are banks, obviously, that sell from time to time, but overall, with them combined together, they are buying. And they've been buying gold since 2008. It's been a remarkable increase, and that's about the time we started to see gold's price go up. On the demand side, gold and silver are connected through the jewelry market, but unlike silver, gold has very few industrial uses. And by contrast, silver has a myriad of practical uses, in fact, over 10,000 of them. A quarter century ago, the biggest of these applications was photography, but that has dwindled from 25% of annual silver mining output to less than 4% now, explaining in part silver's underperformance relative to gold. But now things are changing. Yes, indeed. In fact, we'll move the coins out of the way because now we're talking industry. Gold is hardly used in industry. Gold is mainly a metal that you will see that is treasured. It has some industrial applications, but not nearly as many as silver does, obviously. And so dwindling is for the photography, but on the positive side, silver is finding increased applications in batteries and solar panels, and that is increasing exponentially, pretty much wiping out the loss from photography. So most silver is used for other industrial purposes, and this leaves silver at the mercy of the strength of the global industrial demand, hence the market around that demand for it. And we've seen a deficit compared to the mining for the last 5 years now. So that is a part of what is causing silver's price to go up. And so really essentially what's happening here with that, and we also have the Chinese market, something that I've talked about that we should be watching very, very closely. The Chinese market is very important. They've been importing a lot of unrefined silver. They're mining silver as well, too, and some of the mining output has increased slightly, according to a CME Group, for silver in 2025. But will that be enough to meet demand? Many people think no. A central bank buying of gold has contributed to its outperformance relative to silver. The decline of photography has hurt silver's price, but the growth in the solar panel manufacturing may support the price for silver. And we also see that a growth in artificial intelligence and the Chinese market and other things are going to have an impact. And slowed central bank buying for gold may also aid and assist silver's move to the upside. So those are the factors. The gold to silver ratio has been tightly connected to this pace of Chinese growth, essentially is what's happening there. So we're going to keep an eye on what's going on. That's why I talk about what's going on in other parts of the world. And we know that the silver is going to continue to have applications in artificial intelligence, EVs, and all sorts of different things as uses start to increase. And we also start to see more and more demand for silver in other sectors of the economy. But, one thing is for sure, I am certainly still do believe that silver as a monetary metal will still reflect its value as a precious metal. And as gold prices will likely remain elevated, people will see opportunities for silver. And I think, in a sense, there'll be a natural transition to get into silver's price as it starts to make a move up and climb up to close to $40 an ounce. People will see opportunity there. In my view, seeing that ratio narrow gradually is actually a better thing than watch it spike and be sporadic all over the place. And so that's why I am pretty bullish on silver in the coming days and months and years, actually. And I believe that we could see that ratio narrow to maybe below 80 as we see a bull run start to take effect. I've actually been bullish to the detriment of being wrong for my year-end annual price predictions for all but 2 years. But I continue to be bullish on silver overall in terms of its price. But one thing I've been consistent on is no matter what the price does, silver over the long course of time will protect your wealth, just as gold does. But gold is just a more stable store of value in comparison. And that is important. And this is one of the reasons why, since 2017, I've started to accumulate more silver, or more gold than silver, rather, into my portfolio. So there you have it. Now let me know what your thoughts are about gold and silver and the comparison between these two metals. I think as a stacker, we really should not compare because in terms of one's performance compared to another, because they are more different now than they have ever been. And that is something, a realization that we should take into account. And I think what I've just expressed to you explains that. And so let me know what your thoughts are down in the comment section below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for watching, and encourage you to please rate, share, comment, and subscribe.